You're listening to Biotech Hangout, a live and unedited weekly discussion of all the latest news in our industry with a group of biotech leaders and experts. I'm Chris Garabedian, and my co-hosts today are Mike Yee, Paul Matteis, and Sam Fazeli. For more information about our hosts and guest speakers, or to listen to the most recent episode, please go to biotechhangout.com. We're going to go ahead and get started. So first, obviously, biggest week of the year and probably the biggest signal for sentiment coming out of the JP Morgan conference, which just ended yesterday or today, if you've got some follow-on meetings. I'll just say it was my first JPM since 2019, and it felt really good. I mean, I think, all positive signals were on. I think, Mikey's going to talk about this a little further in terms of investor sentiment. The big news was that there wasn't as much M&A, but actually Adam Forstein and Daphne Zohar posted his article, did a really nice article, I thought, on why this is a good thing, why this could mean, some positive momentum, that there wasn't as much M&A announced this week. And I think there are some good reasons for that. But overall, I think, uh, short of a macro existential, non-biotech, geopolitical crisis, I think things should look good for 2026. But Paul, why don't you weigh in on this? What were your thoughts coming out of the week?
Yeah, I mean, I think in general, on Monday, some of the chatter was, there's not much news, not much going on. XBI sold off a little bit on that, but I mean, it feels like a lot of investors are coming off a great year last year, to say the least. And, I think we've talked about on this podcast, like a lot of structural tailwinds to the sector, right? I mean, it feels like, drug pricing risk is, knock on wood, like not that significant right now. A lot of successful commercial launches, a lot of great data readouts, investors getting rewarded on taking data risk. We saw some financings early in the year that were really significant, and that didn't take the wind out of the sails. And so, especially with the RemeGen news the week before, which, realizing that's not a done deal, but that's a really, really big M&A ticket. My conversations were generally very positive, and I also think they're positive, but things like aren't overheated, right? Which I think is also good. Like, if you're an investor or a company in this sector, like, you want sentiment to be 7 out of 10, right? Like, you don't want it to be 3 out of 10. You don't want it to be 10 out of 10, because 10 out of 10 is scary too. So I feel pretty good.
Yep, and I know, Sam, you didn't attend, but just curious what your thoughts were from just reading the news flow or following X and any posts. Did you have any takeaways?
Yeah, so the way that so everybody went in, as Paul said, looking for maybe some M&A, and of course you look after we didn't get that. Healthcare space did, we didn't. And you look at the share price action during the week, and it tells you, I really quite like the way that Paul put it, 7 out of 10, which is nice. It tells you a little bit what the feeling was out of the conference. On our drug chat, we have a pretty hefty drug chat where there's over 2,000 people. It just felt to me that people were taking it in their stride. Is that the best phrase? That's the best phrase I can come up with now. There was an over enthusiasm. There were some questions about the way that people were commenting on their week, etc. But I think the sentiment was. I've just asked the question actually, and I didn't ask was your sentiment negative coming out of the meeting? And I think it was in that same zone of 6 to 7 out of 10, which is great. And and also we started the year with a super strong week where we got M&A and a whole host of secondaries. So would love to hear what Mike thought.
Yeah, Mike, you talk to a lot of investors and just companies, and yeah, we'd love to hear your perspective from the kind of insider investor scoop. And did they have similar sentiment? Yes, we can.
Perfect. To the coin, one is on specialists and hedge funds and those that we are quite familiar with, and then of course just the broader mutual fund, broader generalist community, which is important. And I think that you guys said it well. A lot of things have passed. Drug pricing, stocks are acting a lot better, and I think that folks coming into 2026, specialists definitely are more optimistic about putting money to work. You're seeing follow-ons. Obviously, there was also an IPO that happened that traded up well. I think that's notable. And there's definitely a buzz in the specialist community about privates and crossovers and all that sort of action getting done, all on the expectation, and I would say agree, that a lot of this is coming down the pipe and is all going to go public this year. So that's all a good telltale sign, obviously, that there is some anticipation, expectation, and ability to go out, and that's all from a lot of specialist money. So I think that's important, and that is a reflection of the optimism that I think pet people generally see, not one of frothy, bull market, climactic, IPOs trading up 100 and 200%. Those are probably bad signs. And obviously not IPOs that presumably are just gonna tank. So that's on that side. And the other side of the coin, I think, is also important, which of course, just the broader market, broader portfolio mutual funds, portfolio managers, mutual funds, where they don't obviously traffic so much in small biotechs, but obviously the idea that people feel better about putting more money to work in large pharma and large biotech and just broader biotech. And that's obviously a bit of a reflection of the fears and concerns about the broader S&P 500, which is at an all-time high, and obviously the whole AI trade, which is not so relevant to this podcast, but fears that growth and things that are a little bit expensive make pharma and biotech inexpensive at 15, 14, or even Lilly at 30 times is not expensive if Costco and Walmart trade at 40 times. So that's good, and that makes our group a little bit more focused on as money comes in, and that's good for both sides of the coin, and that's good for biotech.
Hey, Mike, do you feel like generalist interest in the sector is still largely restricted to the momentum-y large caps, or do you get the sense that it's actually even broader than that?
Exactly why we are more optimistic about the whole pharma biotech group, and actually pharma to some extent, because it's more than just I like Lilly or I like AbbVie, and that is that people definitely care more about Merck and Bristol and Pfizer, even that, and then that means that Gilead and Amgen, which by the way have traded pretty well in the last 6 months, are also a beneficiary. And again, that's part of because the whole sector has been so bad for the past few years, and everyone is nervous about the rest of the market getting a little tipsy. So that makes our space better. Now, obviously, if fundamentals are good too, which is happening, right? Then that makes it better. And it's not just what we call renting the space or leasing the space, but rather wanting to own the group more this year. And I think you can also see that it's going to potentially buy RevMed. The stock traded up when AbbVie was looking to buy RevMed, at least for an hour. The stock was actually up 6% that hour. So it speaks to people who do care about wanting to buy the group. If these pharma companies and biotech companies are putting money to work and making their stories better because the patent cliffs are so bad, that there is broader money going out, because it's certainly not specialists buying AbbVie or Merck to make the stock go up that much. So that's a positive.
So can I just, I heard from, for folks who were there, did it feel like a lighter JPM? Do you have the stats already? Because when I listened to the very nice stat, actually read out loud, it was the or whatever it's called, the podcast that they have. They started off by saying, actually, and it was very easy for us to get here. It was not difficult to book a flight. It wasn't full. And it just felt like they were it's saying that it wasn't as busy. Did you get that feeling? Anyone?
Yeah, I haven't been since 2019, as I mentioned, but it seemed one noticeable thing is there wasn't as much street traffic. That's what I remember from old JPMs, is that the streets seemed as crowded as the hotel lobbies and all of that. I do know that the traffic was still very tough. To get an Uber to just go, half a mile was really challenging. You still saw, many lobbies full. But I think it abated during the downturn, and I don't think we're totally fully back. I don't know the numbers. I'm sure somebody's capturing that. I wouldn't necessarily put stock in that the flights weren't necessarily full out of Boston. That is notable, but definitely there was a lot of activity there. It felt good, and it felt buzzy. But I don't know if anybody else wants to comment. Let me comment on how all of this, how I see it as it relates from the venture side. So first, everybody, venture is a lagging indicator. So we very much follow the public markets, the valuations, the IPO window. All of that tells us that it is a safer market for VC, especially if we have portfolio companies that might be candidates to go public. And here's my take on it. First of all, the last quarter was really healthy. Follow-ons, it was the best quarter for a long time. And the valuations came up. I think that's why companies were comfortable raising money, usually off of data readouts and stock, movement. Stocks are moving on data, generally speaking, and so that bodes well to do follow-on offerings. And then the first week was, a record week before JP Morgan. Somebody did an analysis going back at least 10 years, I think, and it was like the best first week of financings prior to JP Morgan, or at least one of the best. And the reason I think this is important is, management generally doesn't look to sell quickly unless they have to. And so, they'll take a big premium, they'll take an exit. And I think you're seeing a wave, and this is related to the idea that we didn't see as much M&A this week, is I think you've got more companies that are flush with cash. They don't need to be acquired. They can still execute and continue to grow value. We're seeing a larger group of companies with data that has a pathway forward toward a commercial product, and to have the dream of becoming that 10, 20, 30, $40 billion stock, a valued stock. You've got a number of companies that have entered that category, who want to be the next, Vertex, if you will. And so I think that's part of the theme that I see on why there may not be as much M&A. And I think this means that, maybe the market is shifting a little bit to being, a biotech market versus a pharma market, buyer's market, yeah, versus seller's market versus a buyer's market. And so I think, that really bodes well. And I think people are seeing those companies that stay independent, that they do reap the rewards of that. And so I'm intrigued by that, because what it means for VC is that there will be more opportunities for companies to feel like, if they have a good data set or they have a really differentiated product, that if the IPO windows, that's what we're all waiting for. Can IPOs go out there? Can they hold their value? And does the window really open up in the first quarter or the second quarter? And so that's what we're going to be looking at. But I think also VCs are deploying capital, not to miss out on 2026 if the IPO window does open. They don't want to be on the sidelines if a lot of those bets go public and they have good aftermarket performance, because their LPs, all of our LPs, are waiting for money to come back. And so if the M&A isn't the possibility, then the IPO is the other way to exit. So I'm feeling pretty optimistic for venture in 2026. That like we've all been saying, it's not exuberant, but it's kind of a healthy, steady state that I think we've all been hoping for.
What's interesting there, Paul, you just pretty much, what he said about the M&A companies are cash and they can just wait. Management don't have to sell. You literally described RevMed there, right? Which is perhaps why it hasn't come to pass, because they've got plenty of cash. They just did the deal with Royalty Pharma a few months ago. They have assets that look really interesting and meaningful probability of getting to market. So what's the rush?
Yeah, absolutely, Sam. And that was Chris who made those comments, but I'm going to go to Paul next. So Alnylam interesting. They borrowed a little bit of the playbook from John Marganore. If we all remember way back when he had that 5-year plan, and then he updated it again and kind of delivered on that pipeline. And now Yvonne Greenstreet had another kind of longer term plan unveiled. You want to speak to that, Paul?
Yeah, so Alnylam had a really interesting JP Morgan going into this year, right? They launched Amvuttra and TTR amyloidosis. It's been one of these, biotech launches that we've seen over the past few years with the mid cap graduating to a large cap like Argenx and Insmed, where really just crush numbers to the point that the stock arguably got ahead of itself, right? And I think the chart tells you that, where for 3Q, they destroyed the sell side number and yet the stock traded off. And then going into 4Q, there was a lot of concern. Shares traded down due to weak script data. And we were left with an interesting JP Morgan situation where they missed the fourth quarter, but gave really strong guidance for 2026 and some interesting 5-year goals for 2030. All of this was kind of received in a way that I thought was like somewhat polarizing. On the one hand, the 2026 guidance was strong enough in the backdrop of a weaker 4Q that you had some people wondering if, hey, is this actually too high of a bar, right? And then on the 2030 side, there was some satisfaction with the revenue guide that they gave, a 25% CAGR, but some consternation around the margin guide they gave, a 30% operating margin, which, I think people look at as not really all that competitive with other large cap companies. I'll just give our view quickly if anyone wants to say anything else. I mean, we thought that maybe this 2026 guide is not as much of a reach as others think. From meeting with Alnylam, they talked about a lot of factors that impacted the 4Q that could turn into tailwinds going forward. They had inventory drawdowns, some price concessions that maybe we're not going to see as big of a one the next couple quarters. And then on the 2030 side, I think it's a really tricky situation for a company like Alnylam as it relates to managing to a margin, because they talked about a 30% operating margin, which again, relative to the kind of market cap peers, revenue peers, is not that compelling. But people have to remember that they pay in these peak years about a quarter of Amvuttra to Sanofi. So when you think about a 30% operating margin, ex royalty, it's really over 50%. And if you're a company with a real R&D engine, unless you're like a spec pharma company, you're not going to optimize your underlying business to something that is that much greater than a 50% operating margin. So we still felt like the update here from a fundamental perspective is still overall positive for Alnylam as it relates to the TTR franchise and the fact that they're going to be spending 30% of revenues on R&D. So you have to believe with 4 INDs a year, they're going to get more meaningful drugs coming out of this company that are not in the model. But just an interesting example, right, of a company that crushed numbers to the point that it created what people on Wall Street refer to as I don't love this term, but a whisper number, right, like a sort of true buy side consensus that is always kind of ethereal and higher than the sell side consensus. And then now I think people are struggling with how to value this company. Do we think about the margin? Do we think about revenues? How much credit do we give to the platform? But still feels like they're relatively well positioned, even if the stock has taken a breather.
Yeah, it is interesting to drive a operating margin that far in advance because and will have many opportunities to adjust for the right reasons, presumably over time. But I think they're signaling that we're going to be a cash flow positive company with good R&D, and so that those are the two things people are looking for, right, in any long-term biotech play. Let's go to the next topic we have is Moderna. Sam, I know you've talked a lot about Moderna. I want to go to Mike too on just the mRNA space in general. But Sam, what was the update from Moderna?
Sure. So, Chris, this is a name that if you look at the share price move action since a low of 23 in November, it seems it's almost doubled. We're now at $41. And pretty much 3 things have been driving this. One, of course, is perhaps a little bit, I'm speculating on some of this, right? The super flu that people are talking about. Maybe some folks have got a bit more into the groove about thinking again, is this we need to be invested? And perhaps a lot of this is retail. I don't know exactly. Back in the vaccine names. And of course, the company's guidance has been pretty wide, 1.6 to 2 billion, which has been cut all along the year, except until we came to the first week or second week of Jan, which was the announcement just ahead of JP Morgan, which was several positive things in it. One, they updated the guidance with regards to cash, which is great. So they said they're gonna come out of the year with about $8.1 billion versus 6.5 to 7 that was guided in November. So that's a pretty big jump. About 0.6 of that, about half of that is coming from a drawdown on the loan facility that they have, which kind of also brought me some questions in my mind. I'd love to hear what Mike thinks of that later. Why are they drawing down? There's no obvious need with that cash balance in the bank. We've asked our credit folks. They didn't say that there's any necessity to draw down as part of deals usually. Anyway, so that happened. And of course, they guided slightly above the middle of the range, but which was in line with consensus that Bloomberg gathers. And they they stuck with their 10% growth in 2026. I mean, I don't know how much stock you put by that, because at the end of the day, they had pretty big numbers at the beginning of the year last year, and we ended up at a much lower number in terms of revenue. And of course, the latest thing is the Arbutus situation, who had a patent invalidated in Europe, and Arbutus says this has got nothing, they'll appeal that. This is nothing to do with has no impact on the US litigation that's going on. And why I mention this is that this is the key bear argument on the name at the minute, apart from COVID shots sales dropping and the company's cash burn being high and all that, which they're addressing. So the Arbutus deal, court case, I think is coming up. The trial's coming up in March, and there are people who believe that this is going to be a major problem for the company. We're doing our own analysis, hopefully out next week, with our patent attorney colleagues within Bloomberg. We'll have a view on that. But this was this was the one thing that particularly drove the stock up today. It's up about 5% today. So, and I suspect it's going to give it some momentum and change maybe people's view with the risk of this trial. Anyway, and 26 is important for them because they might get the cancer vaccine data for the adjuvant melanoma phase 3 trial readout this year. Although the company says it could, obviously it's event driven, it's the usual argument, it might push out to 2027. Over to Mike.
Yeah, I just want to comment that on Moderna, Newbar did he did, I think a couple interviews, and he definitely was throwing shade on the FDA about mRNA. And so he's doing his kind of PR to, revive, why mRNA is so important and needs to go. But Mike, any comments on that?
Hey, you can hear me okay? I got my X working.
Yeah, we got you on X.
Cool,
Perfect.
cool. So 3 things. One, I think coming into the year, obviously Moderna was one of the worst performers and has been. So, at the start of the year, we definitely were seeing some unwind of a lot of short positions. That definitely was part of an early move on a hugely crowded short stock. That also started to unwind as people thought about the cash expenses that Sam just alluded to. They gave improved cost cutting, or more cost cutting, I should say, in November at their analyst event, and then yet again here in January. So because there was a significant fear that this company is just burning through all the cash, it's definitely been helpful that they've cut the burn down from about 3 to 4 billion a year down to about 2. So that's been helpful. So there were 2 fundamental things going on. One is that there is definitely some view that the cancer vaccine data is coming later this year for melanoma. Sam mentioned that. We're at about a 50% probability that that's going to work. That would be a significant catalyst to stock. But something we also picked up is that they're talking about a randomized phase 2 adjuvant renal cell study reading out this year, and they reiterated that that's also possible. So just if you've been short this stock, or have been put this one out a favor, they're saying that this renal cell carcinoma study, if it reads out, actually could be filed to the FDA if it's positive on a phase 2, and they have statistical protocols and all that kind of thing with the agency on that. To talk about the other second part is the patent situation. So yes, I agree that there is significant concern, because if the company's burning multiple billions of dollars a year, based on various calculations, depends if you're Arbutus bull or not, then you could be putting 5% royalties on the COVID sales or 10 or 15 plus percent royalty damages on all of the COVID sales in the US. Funny enough, or interesting enough, non-pandemic portion. So if you go back, there's in the contract, the initial first year contract, the government protects you from any damages on the pandemic portion. But excluding the pandemic portion, $15 billion of sales outside of the pandemic. So if you put anywhere between a 5% royalty or a 15-20% royalty, you're up to multiple billions of dollars of damages. So if you're running out of cash and then that could happen, that could be pretty bad. So just want to point that is coming up. But the company pointed to, well, many people think there could be a settlement. So if there's a settlement with the trial starting in March, that could be a positive. And then, yes, as of today, again, another example that they beat BioNTech on some patents, or I guess this one's Arbutus, but also previously they beat BioNTech on some patents in Europe, and no one's paying attention to that. And so actually, Pfizer and BioNTech may actually owe them money. So a lot of negativity on Moderna. Don't want to spend too much time on that, but some positive things flipping around for 2026.
Great, thanks. All right, we're going to go to the AbbVie deal, and let's go to Mike if you want to talk about that. By the way, there were other China deals. I mean, China is still a presence and a player. I think they're going to remain so to continue to do deals. But AbbVie did a big one. So why don't you talk to that, and then we can go straight to Sam to comment as well.
Yeah, so this has been a consistent theme all of last year, right? And so here we go. Again, actually, this is the second Chinese PD-1 VEGF deal in a row. Obviously, Pfizer 3S Bio connected with one of the largest, with the largest upfront payment for a PD-1 VEGF, and then here, AbbVie did one as well, speaking to this whole idea that pharma can go to China and look for all of these assets and bringing all of this stuff in. So AbbVie, which definitely has firepower and capacity to go out and get more things, is jumping into the race in terms of the PD-1 VEGF competition. And what was interesting about that is one is another China deal following Pfizer, and two, it's kind of funny, is obviously AbbVie. One of AbbVie's most significant and successful transactions was with Pharmacyclics and Bob Duggan and that whole crew, which has been phenomenal for AbbVie. And of course, all of that management team is at Summit. And Summit, theoretically looking for a partner. There was speculation that those two could connect there. And of course, they didn't. And AbbVie went to China to do the deal. So Summit's still looking, but they didn't end up connecting on that despite the prior management relationship. So I thought was an interesting angle.
Oh, that's if you don't mind, Chris, that is quite interesting. I remember that deal. I'm old enough to remember the deal. But so just a couple of things to add here. What I've just been looking at our licensing data in the Bloomberg terminal. BioNTech's deal was the 6th largest upfront based on the data that I've got in the past 5 years. Above it was, of course, the Daiichi Merck, Galapagos Gilead, Novartis, Bausch and Lomb. I mean, that's not quite the same kind of ballpark, but Zealand and Roche. And then, of course, the 6th one was BioNTech. And 3S Bio was the 8th largest. So clearly there's plenty of excitement in here, but the AbbVie $650 million kind of pales into relative insignificance compared to the 1.25 billion that 3S got and 1.5 billion that BioNTech got, perhaps because of the stage of development or whatever. And of course, the other interesting thing is listening to all the companies at the conference, and they're all falling over each other, trying to suggest that there's a reason why their drug is different, better, best in class, etc. But what we know for sure is that Summit is going to be first in class to market, assuming the trial works and gives you sufficient clinical benefit. So what I'd love to hear how Mike's modeling this is, how do you share the piece of the market that they get from the future biosimilar PD-1s between these drugs as they come? We can obviously take it and say, well, Summit's going to be first, so it's going to be the the largest, but then they don't have a partner yet. Pfizer comes along or Bristol Myers comes along. So it's going to be quite interesting and quite fun to model this. Hopefully some of us will get it right.
Mike, any further comments on that?
I don't have a strong view either way on that. I mean, I think, and 2 points is one, how big is the market going to be, and two is, I'm fairly confident Summit is gonna have to partner up at some point there. So, um, your guess is as good as mine.
Great. Sam, there was some AI news. I know Jensen Huang of NVIDIA was there. A lot of people capturing selfies, and they had their own news this week about China, potentially restricting the competition there. But what was the AI news of the week?
Yeah, so obviously, and so one thing I have to say first, I'm not sure what was he wearing. Was he wearing a glittery jacket or a toned down jacket? Because he
Yeah,
does
he's
both,
got
right?
his own Steve Jobsy type look. Yep, for sure.
No, look, there's never a shortage of interesting comments from the company in general. But of course, the week again, alongside of the Moderna news, started with NVIDIA Lilly deal, putting $1 billion together into this structure to fund over 5 years AI for use in pharma. Everybody's at it. So, one of the things that kind of stood out as I was listening to these things, sometimes things just get stuck in your head. Pfizer said AI was a significant contributor in our ability to take out $5.6 billion of cost, plus even more in manufacturing, if you count. So, and now we are ready to scale it up to levels across the entire organization. What does that mean? Did it help the company reduce headcount by handing over some administrative stuff to AI? I doubt that would have made much of a difference to the 5.6 billion cost cuts. Did it help with automation? Hence, maybe the comment on manufacturing. I wish the questioner, of course, Chris Schott does his best in a 40-minute space to get the most out of the conference comments. Or identify duplication, etc. I don't know. And we've recently at BI done a very massive 600 C-suite survey on AI. And frankly, nobody's really talking about headcount reductions. Maybe they're not hiring or reducing the hiring rate, certainly increasing productivity within teams, but very few are looking at it as a way of reducing headcount, which I think a lot of AI companies actually do say that. And so what's going to be interesting is the comments that were made by NVIDIA again, Revity, Salesforce, Viva, on how their AI systems are helping through the true agentic systems, helping pharma and drug development. And I think we're going to have to wait a while before we see an actual drug make it through serious clinical trials where AI was a significant contributor to its discovery, and maybe another 3 or 4 years. That's my prediction.
Yeah, that sounds right. And I think this is going to take a while to see who the real winners are based on the number of drugs that are truly driven off AI that emerge as truly best in class or really differentiated. I thought it was notable. I can't remember if it was Stat News or Endpoints or somebody interviewed Eric Tokat. And the most fascinating, was a question that said, "Is a pharma going to step in to buy an AI company?" And it was, I mean, for anybody who would understand and know that dynamic, it would be Eric. And he had a definitive no, right? He doesn't see it happening in 2026. And he says they're trying to build stuff organically internally. They're doing collaborations and partnerships, but he did not see a AI M&A on the near term horizon. I thought that was notable. So let's go to the regulatory front. And for one thing, Makary was there at the conference, and FDA was there to do some talks at, I think, at the J.P. Morgan conference itself. But he definitely knows PR, and he was doing little videos, and obviously waited to this week to announce some things. So Paul, why don't you take one of the notable things, and Mike, you can take the other.
Yeah, sure. And whether this FDA is flexible and libertarian or stricter than any FDA we've seen in a long time, continues to be this push and pull that investors are grappling with, especially for some of the smaller companies I cover that are focused on gene therapy or rare diseases, where we've seen now a number of times where a company thinks that they have alignment around something like a single arm natural history controlled trial or analysis or a biomarker, and then they're saying the rug got pulled out from under them, and we're kind of left to say, okay, when we analyze public companies, us analysts and investors, we don't see meeting minutes, we're not sitting in the meeting, right? So it ends up being he said, she said. But I think at this point, right, we've seen a number of things now that is suggesting that this FDA, when Makary is on TV and talking about expediting things and flexibility, that at least so far that feels like it's more talk than reality. And so there was another example of this, right, where Dr. Makary was talking about streamlining certain things on the CMC side for cell and gene therapy, which Chris, you probably would have a more intimate understanding of the implications of that than me. But optically sounds very good. But then you had Atara announce a regulatory update for their T cell product for Epstein-Barr virus, right, where they received a CRL, and they felt like they had alignment on their path, and of course the stock trades down 50%. And so we've talked about this on this podcast. I cover Unicure, which has become like the poster child symbol of kind of FDA flexibility. Company has alignment, they have breakthrough, now they don't. And I still feel like again, from a sector perspective, like in most cases, right, if you're investing in a company that has a defined clinical trial path with clear precedent, placebo-controlled clinical outcomes endpoint, like this probably doesn't matter for the most part. But for companies in that kind of flexibility space where data maybe are more up to interpretation, this continues to be an overhang. And maybe just the last thing I'll say before I turn it over to Mike is just another analyst at Stifel said to me, I don't remember the last drug that got approved on time. And I'm sure that's like hyperbolic, but then he and I were talking about our coverage, and all the drugs that have gotten approved in our coverage so far under review have been delayed in the past 6 months. So I still feel like an FDA is a small overhang here, as we're all still trying to figure out like how do we sort of price this risk and uncertainty going forward.
Yep. Mike?
Yeah, so another interesting development is if you've been following one of Marty Makary's uh, uh, ideas for accelerating drug development is this whole commissioner priority review voucher, commissioner national priority review voucher, and whatever you think about it, the idea of approving drugs in as fast as 2 months sounds pretty amazing, and they have given CNPVs to 15 plus drugs. There's been 2 different rounds of that. And what is interesting, if you go read the method to get the drugs, of course, unmet need, addressing particular big areas of health, is that there is an angle that you would work with the administration to also reduce drug prices. So that's a whole interesting angle, of course, and perhaps it's a discussion with the FDA. So with all the insights into CNPV, there were a number of these drugs that could be approved in as fast as 2 months. And of course, that's better than priority reviews, which are 8 months. And so while there's only been 1 or maybe 2 drugs that have been actually approved under this, there's a number of drugs that are on file under and using currently under review the voucher. That would have included Sanofi's Tzield, a type 1 diabetes drug, and also Lilly's orforglipron, which got the voucher as well and has been filed and is under review, and hopefully it's going to be a fast approval. And people were thinking that could be very soon in Q1, be ahead of Lilly's guidance of Q2. And obviously, oral Wegovy pill just got approved. And actually, if you were walking around the conference, there were some taxis or cars that had a whole wrap on them that said the pill is here. That was actually the oral Wegovy advertising for that. That was interesting. But going back to what the point is that it was a report out saying that the FDA is scrutinizing a lot of the drugs, and that there were at least 2 delays. One was the Sanofi Tzield, because there are some safety things that they're looking at. And 2, specifically, and I'm not exactly sure how they got this insight, was that Lilly's Orpho is looking for an April 10th approval. So that was a date that is farther out than what Wall Street was expecting. And so Lilly traded down as much as 5%. I think it ended the day down 3%. So what is the point? The point is, oh, it's not all these drugs are not going to get approved in 2 months. Each one is going to be different. I stand by the idea that these are going to be approved faster than a priority review. And you should expect that the FDA is going to take a look at stuff, and you'd want them to take a look at stuff rather than just blindly approving drugs in 2 months. So they should look at Orpho. It does not matter if it's Q2 or Q1, even though the stock traded down. It's all very fast, and that's kind of a positive, I guess. That's come out. One of the positives that's come out of the administration, I would say. Anyone have any thoughts on CNPV?
Yeah, let me just add. So first, a corollary is the priority review voucher that companies get that are transferable. I thought it was notable that Jazz was able to sell theirs to an undisclosed buyer for 200 million. So those prices were coming down. That is a higher priority. Just a shout out to my boss, Joe Edelman, did an interview. He rarely does interviews, but he did it on Biotech TV. And he wasn't too concerned about the overall FDA policy that'll work itself out, but he was concerned about staffing and being able to hit timelines and all of that. And then he also just related the gene therapy guidance. He thought he was asked what's the most underhyped area, and he was more bullish that gene therapy is still valid and should come back after this kind of cold period. But anybody else want to comment on the regulatory FDA policy front?
Chris, did we lose you?
I'm still here, Mike.
Oh, Chris is Mike. Why don't
Just
you get
it,
going on the next topic that we wanted to chat about, which was all the obesity
yeah.
updates. So you did to a degree, but you didn't talk about Amgen yet.
Perfect. That is a perfect segue. I just wanted to say, obviously, obesity remains top of mind. It is top of mind for most mutual fund investors. It is still obviously a huge situation for small cap and mid cap biotech investors in biotech. And I just wanted to point to three things. Obviously, we already know we don't need to run through that oral Wegovy pill is now approved, and I think the first scripts were out. I think that number just came out as over 3,000, which is good. I think Novo's trading up a few percent on that. But there are three developments on the obesity front that I think are important for our audience. One is Lilly is imminent and it's going to be big, and so this is going to be the year of how big the first year of oral GLP-1 drugs are. And then two is the people coming right behind them. And if you haven't been paying attention in the last couple of months alone, um, obviously the Metsera deal closed with a bidding war. I'm sure you guys talked about that. We met with Pfizer, and as expected, the Metsera data should be out and is going to be presented at ADA in June. We could be getting some disclosure on that beforehand, and they have a monthly injection and a monthly amylin. And why that's interesting, of course, is because both Pfizer and Amgen would probably be the next two companies that are getting approvals in obesity other than Novo and Lilly. And Amgen is finishing their phase 3 with their monthly. So the race for the two next guys is the monthly drugs. Now, Amgen was supposed to come out with big data on their monthly drug for the 2-year data, and they did come out with something, except there were zero numbers around it. So they came out and did the whole fireside presentation. They said the data was positive. It looks like it's at least a monthly or a quarterly, but there was actually no numbers, no data, no charts, and Wall Street was left a little bit disappointed there. So I just wanted to say that there's some controversy around that, but perhaps they're being, keeping it close to the vest as competition. And then the last part of it is it's still not over, because every single company I spoke with, and I met with AbbVie and Bristol and obviously Merck and others, and they're all still looking for more obesity assets. AbbVie has got one thing. They're looking for more. Amgen's looking for more. And Bristol, don't be surprised if they do something. In fact, there was speculation they were one of the early bidders on Metsera. So more to come on that. But, we're going to hear a lot about obesity this year.
So, Mike, where are you on obesity 2030 sales? We've got we had Albert Bourla of Pfizer talk about $150 billion. I'm not sure of whose model that is. I think we are at about 100, 210. Where are you at?
You're at 210. That's a
No,
pretty
100,
big.
100, 100
Oh,
to
100.
110. Oh my God.
Yes. I think we're like at 115, 120. We had that split, obviously, majority Lilly, then Novo, then the others. And we have orals at about 25% of that. The good thing I think, which you could appreciate and everyone could appreciate, is that even though the price went down, which would be expected, is that they did do the Medicare deal, which opens up a significant portion of the population, and the cash pay portion, that the price came way down as expected. But that offers a lot of people the ability to get these drugs for an affordable price. We could debate who can and can't afford, $2.99 a month and $3.99 a month. But an interesting data point for you and for everybody is that actually Europe and outside the United States, where it's all cash pay, has been crushing sales numbers. And last quarter, Lilly
That's
blew
right.
out the number, and that's all cash pay. The European governments do not pay for the drugs in obesity, and yet the sales are crushing it, and it's all cash pay. So yes, there is demand for it at $300 a month.
I mean, in
So
the
where do we stand on that? A lot more to come, and a lot more
500
interesting.
billion.
I'm not that high. I look forward to other future podcasts here where we're going to talk about, if you haven't already, or maybe you did last month, the NAB
Yeah,
stuff, the
we did that
activin E
already.
stuff. That's cool, and obviously some of the other agents that are coming. So that's pretty cool.
Yeah.
Um,
The
the
numbers in terms of cash pay in the UK,
UK,
the
the
reimbursed
reimbursed
version, at
version,
least
at
by
least by
um, through NICE, is for people with BMI of 40 plus at least a certain number of, and maybe I can't remember, is it 3, 4 comorbidities? I mean, I think we've worked out the number there is something in the region of 150, 200,000 subject patients. And that's not even, that's only been going on since June. So I don't know how many people have actually got a paid prescription. So I'm not surprised that most of it is cash. And then, of course, we've got the interesting dynamic between Lilly and Novo. Novo being only 10% of their business in the US, being the cash channel, the DTC channel, and then about 30% for Lilly. That's let's see if that the launch of the orals changes that, or whatever Lilly does maybe change. Novo does changes that. So let's move on to some data. We haven't got a lot of time left, and we've had so much technical
Yeah.
ups and
So
downs
Sam,
here.
can you hear me, Sam?
I can
I
hear you
can
now.
hear
Yes,
you
I
now.
can.
Okay, yeah. So let's go a little rapid fire. We've got 5 data readouts before we close. Paul, do you want to cover Lexio and BioMarin first, and then we'll go to Sam for J&J?
Yeah, sure. And Chris, I'll cover BioMarin first because I want to hear your perspective too, given your long history in this space.
Sure.
So BioMarin had some top-line data for their DMD candidate, which is an exon 51 drug that is an oligonucleotide therapy that, on efficacy, really surprised to the upside. We haven't seen the full data, but they got up to 5% dystrophin, 5% of wild type. This was unadjusted for muscle content. So to my knowledge, that's the highest number someone has gotten in this exon. And if you follow DMD closely, each exon is really different because the baseline dystrophin quantity is different. So there's a ceiling, I think, to how well you can do to some of these, right? Maybe exon, 44, 45, you might be able to get a lot higher. So it's really interesting because there's really not a lot priced into BioMarin. I take a little bit more of a not cautious view, but like wait and see view here because, and then Chris, this is where I want your history for our listeners. This drug comes from, I want to say it comes from Prosensa because, it didn't exist when Prosensa was acquired, but, it's out of that project, right? With Drizaperson, the original oligo from this portfolio, which, did make some dystrophin, but was super toxic. And I think the underlying issue here is that these oligos are not conjugated to either TFR1 or a peptide. So they stay around in circulation, they're immunogenic, there can be risk for thrombocytopenia or renal tox. And again, we haven't seen anything, but for this molecule, there's actually no safety signal that's been reported. But I thought it was notable that really nothing was said on safety at all. And we just need to wait for a medical meeting, which to me remains kind of the most salient question for the competitiveness of this product. So,
Yeah.
I mean, Chris, anything you want to add from your history here?
Well, yeah. I mean, one, I do think their chemistry is more toxic, and so I think I always look at what is any company in DMD not sharing, and that usually raises flags. The other thing is, while I also argued for dystrophin being a good surrogate marker, but there still is not a hard correlation between the dystrophin production and outcomes. And so I think in this space, and we still need to see what happens to Sarepta's exon skipping and what the FDA ultimately addresses with that. So I still have a lens of skepticism until we see full data sets and really understand what's going on. But I think it's good for the field that there's another player and obviously an expansion of different exons that are being targeted. And obviously with Avidity and Dyne and other players in the mix, I think it's overall good. But yeah, I want to see the full data set before I would render judgment.
Makes sense. Maybe very quickly on Lexeo, since we were talking about gene therapy, they had more data for their PKP2 gene therapy. This is a rare cardiac disease. It's got kind of a cult following among biotech investors because there's tens of thousands of patients with PKP2 deficiency. So it's actually one of the bigger gene therapy opportunities out there. I think the challenge in this disease, and you saw it from the Lexeo data and how the stock reacted, is really finding the right endpoint. Lexeo, Rocket, Tenaya, they're forging the path here. And so, Lexeo showed a signal on NSVT, non-sustained ventricular tachycardia, PVCs, these kind of electrical measures of how the heart behaves. And, they're trending in the right direction, but a lot of variability. All I would say is that this is kind of, I think investors get impatient, right? They want the signal to be totally unequivocal in the first data set or the second data set. Who doesn't? But this reminds me a little bit of how the Friedreich's ataxia program played out for Lexeo, where some of the early data were interesting. There was variability. At 6 months, there's a signal, but people are debating how big that signal is. But the data got a lot better over time. And then they were able to kind of forge a path with the FDA on a prospective phase 3 study that is natural history controlled. And so, still risk here, but I think the reaction maybe just kind of was. I think an overreaction because again, when you're sort of first in an indication, sometimes you have to kind of generate some data before you can really know what to focus on.
Yeah, I also think gene therapy, if it's going to come back, people are watching valuations closely, and I think companies like Lexeo, like Solid, like others with gene therapy, hovering around $500 million. I think it'll be interesting to see where valuations go with as these gene therapy companies mature. All right, rapid fire, Sam. Do you want to hit J&J myeloma, and then we'll go back to Paul?
Yeah,
Yeah,
very quick
very
one.
quick one.
J&J keeps
J&J
moving
keeps
the
moving the
goalposts
goalposts
on
on
myeloma.
myeloma.
We've
We've
gone
gone
from
from
Majestic 3.
Majestic
We just
3.
had
We just
data on
had data on
Majestic
Majestic
9, which is the bispecific BCMA CD3 T-cell engager. And everyone's going to keep comparing to Cartitude 4, which is Legend and Johnson & Johnson's themselves, CAR T therapy, CARVYKTI. And you all you have to do is look at the share price chart for Legend to see what the streets and the markets thinking about this evolution, not just from the biospecifics, but also from competing CAR Ts. Over.
Great, Paul. We got 2 more news items for you to cover, and we started a couple minutes late, so we're going to go a couple minutes over. But Paul, you got a couple other news items.
Yeah, which one do you want me to start with, Chris?
Why don't you go to Vertex, and then you can go to Lilly.
Yeah, Vertex and Sionna, their emerging competitor, had some interesting updates on both of their programs for cystic fibrosis. All I'll say is that this is evolving into like a really, really interesting year for both companies. I mean, Vertex has obviously really diversified their pipeline and their drug portfolio over the past 5 years since really the last time there was a competitive overhang with AbbVie and CF. And I don't even want to say that Sionna is an overhang because, Vertex is a huge market cap and Sionna doesn't have any patient data yet. But, Sionna has a really, really interesting drug that targets NBD1 which I would call a different mechanism of CFTR stabilization. I think Vertex is kind of making this sort of taking this reservation with the term mechanism, right? Because all these drugs are correctors, but it's a different binding site on the protein that is not directly bound by the Vertex drugs as we understand it. And so Sionna has some data the middle of this year. Vertex has data for their next gen CFTR modulators later this year, and they're not saying anything about those compounds for competitive reasons. You know, Mike and I attended the Vertex event. It was the first time I really saw them getting multiple questions from different analysts about this in a public forum. You know, I met the Sionna team. We cover that stock. And so just kind of heating up as being an interesting year in CF potentially. I think the other news I wanted to just briefly touch upon was, you know, the Lilly commentary on their TB3 study and how people are trying to figure out how to interpret that commentary. You saw Biogen sell off. You know, for context, this is to me as a neuro person. I mean, this is the catalyst I am by far the most interested in over the next 12 to 18 months. It's a readout that I am. This is not a stock call on Lilly, but I am super bullish on this readout, and I think it can be paradigm shifting for neurodegenerative disease. This is a study where they're essentially trying to prevent the onset of Alzheimer's disease in patients at risk. You know, we know amyloid beta has gone through a very, very long history, but if you look at the evolution of A beta treatments, you know, first studies in moderate to severe Alzheimer's don't work. Some of the studies in early MCI show a small benefit, but in a subset of early MCI in the Biogen and Lilly trials, in the patients who have the earliest disease, you see a considerably bigger effect size. Our view is that in these prevention trials, you should see an outsized effect size. And also, you know, again, a lot of the infrastructure has to be built. But I think who wouldn't want their plaques taken out if it's going to lower their risk of Alzheimer's substantially, as long as these drugs are safe, which I think in an earlier population they likely will be. You know, Lilly was more affirming that the data are expected in 2027, which is not new, but people have been looking to 2026 as the time for a potential interim. I think the question is like, you know, does this 2027 reaffirmation suggest that an interim has already happened or not? I wouldn't interpret this as at all negative to the POS of the study. I mean, Lilly remains very confident. And I also think an interim analysis here is just going to be subject to the number of events. The biggest uncertainty with these prevention studies is no one really knows how to power them, right? Like no one knows what to expect for the control arm and the rate of progression. But the Lilly study is an event-driven study, which should be a good hedge against powering. So Biogen is laterally exposed here with lecanemab, right, which has been a really significant disappointment. But we think if we get prevention data and it's great and the safety's clean, I think it can really change the narrative on this class.
Sam, you have any comments on that?
Just that as Paul is excited by this, so am I. You know, I used to work on amyloid, and I think this is going to be quite a. We all hope a shift, the sort of shift that we hadn't seen yet with any of them in the later stages of the disease, and I just hope it doesn't fail because it takes the wind out of the sails of all the other ideas that people are trying here. So fingers crossed.
Fingers crossed.
Excited.
Yeah, and I know Biogen, I didn't see the presentation or know the specific, but I heard people talking about that they are definitely leaning into other areas, therapeutic areas, so they're trying to make sure they have hedges against the Alzheimer's space. But I want to say thanks to everyone. Well, overall, I think we all came out with a positive feeling that 2026 is going to be a good year coming out of JPM. So if you weren't there, I think there's a lot of signs you can read from all the final reports that are coming out today and probably next week. So thanks to everyone who attended this JPM Hangout event earlier this week at JPM. It was a great time. I was there. I didn't see as many co-hosts that I was hoping to see. I saw Brad. I saw Tess Cameron. I was there for about an hour and a half, but I think I missed a lot of the large group there. But it was a great to meet so many of you in the room. Special thanks to our Gold Badge sponsors, CFGO, Incubate Coalition, and Syneos Health Communications, and our Blue Badge sponsors, FTI Consulting, Catalytic Agency, and MISPRO. The event wouldn't have been possible without them. We're already looking forward to next year, and I hope we see all of our audience there in turnout next year.